Hey everybody, morning. Another day in paradise. Today is a half day in the market, or they call it a half day. Close at 1 p.m. So if you got anything expiring today, make sure you take care of it sometime this morning. You can think about it. Usually you got a 4 p.m. close Eastern time. So when you're getting around 1 o'clock, you got like 3 hours left. Well, today we're closing at 1 o'clock. So by the time you get to like 10 o'clock, which is just right after the open, you got like 3 hours left. So, got to keep that in mind today. If you're gonna do anything that requires rolling or anything like that, you need to be careful out there. You need to be careful out there for sure. All right, so where did my monologue go? Gosh, love it. I got too many tabs, too many windows, too many everything, it seems like. Heck? Got like 3 discords somehow, some way. Not even sure what I did. Close that, close that. All right. It's not what I needed. I have no idea where the I just have to start a new window, I guess. Cool. So, you know, things are crazy, right? Like the market has liquidity. Is it good? Is it bad? Is it a problem? Is it not a problem? We had this big flush out October, then we came back up. And then kind of Halloween marked kind of at the top, and then we've just kind of been chopping in there. And it's been kind of rough for a lot of people. A lot of people getting chopped up. But everything was frothy, as my buddy Jack likes to say, everything was pretty frothy in the market. So what we do for kind of a correction, and like we kind of were, did we get enough? Is market liquidity the real problem? The Fed quietly, from what I understand, I'm looking at reports and numbers and stuff like that, they quietly about $250 billion back into the market over the last couple of days. Well, that's an interesting. It's interesting, right? Like that's an increase in liquidity. Yet nothing really responded very strongly so far. So I hope y'all had a wonderful Thanksgiving. I tried to explain to people that a 5% dip in the S&P 500 doesn't mean you have to trade your 401k in for a bunker in the woods and a lifetime supply of canned beans. People got epically scared on this last pullback. The fear index cranked up, cranked all the way down, really, fear and greed. And, if you're a headline investor, things got pretty bleak. You see a red arrow, you think the world's ending. You might hear the word correction, and immediately you picture yourself gonna take up bartending, maybe out in the woods. Maybe you identify with this. Maybe you got freaked out on this last correction. And, I kind of get it. It got kind of crappy, especially if you were in these AI names that were a little bit frothy with no income. They got beat down pretty hard. Even, some of the darlings of the year got punched in the face quite a bit. The headlines have been pretty spooky, The S&P 500 enters a corrective phase. The market could be pullback, could turn into something worse. I mean, I've been warning that, there's a lot of cracks in the system. But today we're going to talk about the one thing the headlines always seem to forget. We're going to talk about market liquidity, the big, beautiful government-sponsored money hose that is currently pointed directly at the stock market. See, there's a little secret in the market, and it's not really a secret. It's just that it's so boring that nobody really pays attention. It's not clickbait. It's not good for clickbait. It doesn't get your attention. It doesn't invoke emotions. The secret is that real bear markets, the real soul-crushing, portfolio-destroying bear markets, they don't just materialize out of nothing. They don't just happen. They have to have like kind of systemic reasons. And the number one reason that they happen is because the money system jams up. Liquidity freezes. The money flow dries up. Right now, the money flow is anything but dry. In fact, there's 4 massive spigots, all pretty much turned up to 11. It's important you understand them, because I think it supports whether we can go down right now or if this is just a little hiccup. So think of it as the government's 4-burner stove, and they're cooking up a nice warm bath of cash money for the economy. First off, you have a fiscal put. It's kind of a fancy term for the Treasury Department, now led by Scott Bessent, deciding how to pay the bills for the government. Right now, they're choosing to issue a ton of short-term debt. They have lots of choices. They can go long-term debt, short-term debt. I mean, right now, you can kind of think of it as the government writing a whole bunch of IOUs. This pumps cash into the system, and historically, when they do this, the stock market does pretty well. It's like the government saying, oops, things are looking a little shaky. Here's a little cash. Go buy some stuff. That works. Now, number 2, you have the Fed put. This is different from the fiscal put. All right, Fed put, and this is kind of a big one. This is the Federal Reserve, which is not a part of the actual government, although it might, with Trump's guidance, it might turn back into the government. We'll see what happens next year. For the last couple of years, though, they've been the scary parents threatening to take away the punch bowl. They've been instituting quantitative tightening, QT, which is a scary way of saying they're going to suck money out of the system. But now they're getting soft. Starting December 1st, which is just a few days away, QT is done. And New York Fed President John Williams just hinted at a rate cut, almost a sure bet, in December 10th. There's not really much economic news between now and December 10th, so we may drift a little bit into that Fed news, Fed announcement at 2 p.m. on the 10th. The market right now, all the markets kind of, we see you got poly markets and Kalshi, and you got the CME tool even. They're all kind of pricing in around an 80 to 90% chance of a cut. Let's say 85. Now, not only that, but the Fed's official into that QT, December 1st. So the parents are kind of done trying to be scary, trying to clean up the mess. They're about to, when QT stops, what do you think happens? What do you think they're about to do? If you're not tightening, you're easing. If you're not easing, you're tightening. I mean, there's no in between. There's no sitting still. This is the government we're talking about, even though they're not really part of the U.S. government. And the third and fourth are pretty much boring ones, but they're important ones. See, you have excess liquidity, which means globally there's more money being printed than there's economic growth to soak up that extra money. It's a giant safety net under the market. And you have market liquidity, which just means it's still easy to buy and sell stocks without causing huge price swings. the plumbing seems to be working pretty fine. So what does all this mean for you? It means savvy traders, savvy investors, the ones we're trying to tune out the noise and pay attention to the signal. Well, right now it's not a time for panic. The system doesn't seem to be frozen up. We're having little fits, but they're dumping money in. The article I read this morning put it perfectly. This isn't a stampede type of bull market, but it's not a marauding bear either. It's kind of something in between. It's a stock picker's market. The money isn't flowing everywhere equally. The days of throwing darts at a dartboard and, just getting rich, it's kind of on pause right at the moment. The market's kind of rotating. That's what we're really seeing. We're seeing some rotation out of the AI darlings. I'm not talking about the hyperscalers. I'm talking about the projects that were just getting tons of money, even though they didn't have, when you look at the PE, there's no E. When you look at the PS, there's no S. Yet sky high valuations. We're seeing rotation out of those kind of things into some others. We're seeing some value stocks, boring, profitable, dividend-paying companies start to actually move a little bit, outperform in the short term. Some of them outperforming high-growth tech stocks. We're seeing some defensive sectors outperform the cyclicals. People are buying what they need, not just what they want. And the number one sector that's been quietly leading the pack for the last month or so, healthcare. It's defensive in nature. It's packed with value, something that we all need. And as more and more of the elderly population gets older and older, they got to spend more and more on that healthcare. It's been lagging for most of the year. Some of it beat down. Companies like United Healthcare, Johnson & Johnson breaking out. These kind of names might actually thrive in this kind of environment. They're the opposite of a lottery ticket. They're insurance policies that kind of pay a little bit. We're looking at a potential correction across the healthcare insurance providers, Cigna, Humana, United Healthcare. When that makes the high or low, they can propel themselves massively to the upside. So the next time that you have a friend that sends you a frantic text with a screenshot of a red chart, take a deep breath. Remember these 4 spigots of liquidity. When we actually see fits in the system, it's time to be cautious. I was cautious because we got a few hits to the overnight repo, but it's not sustained. When we get several days of that happening over and over, that's when there's a real problem in the system. So it's not a crash right now. It's probably a sale. The sky isn't really falling right now, but the prices on quality companies have been. And that presents opportunity for traders like us right now. So let's go look at some of the charts and try to figure out where the opportunity is. Remember that we do get that close early today, so it's kind of a quasi-market holiday. Gotta love Thanksgiving week. Jump over here. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. I make predictions. Sometimes they come true. I get lucky sometimes. Sometimes I don't. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, crypto, treasuries. If you trade those things, you might lose money. Make sure you trust people before you buy stuff. If you want somebody to tell you what to do, there's people you can hire for that. But make sure you trust them, because most people out there are just trying to make some of your money into some of their money. It's kind of the way this whole thing works. So here we are. Last trading day of November. 11 months down this year. Nothing economic news-wise coming in today. Pretty much done. December starts next Monday. We've got that FOMC meeting on the 10th. So next week, kind of hold our breath week. 10th, we'll see if we get the rate cut. Got another week of normal. And then we've got a holiday week and a holiday week, and then we're into 2026. Holy moly, where did this year go? Crazy, right? Absolute crazy. Thanks for being here, everybody. Thanks for coming, hanging out. Welcome, everybody. Futures had a little problem, little hiccups in the system, glitch in the matrix. Blamed on a data center outage. I don't know. Was it on purpose? Was it an accident? Well, before we get to all that, here you go. Last day for Black Friday. On TradingView, if you want to jump on it. I don't have a code. I'm not trying to, I use this tool every day. I find it very beneficial. If you want to jump on it, they've got their sale going on. You get 80% off of Ultimate, but I have Premium. You can see right here, I have like 900 days left on my subscription to Premium. If I buy one, I'll bump that up to 1,300 days. I had it maxed out. They wouldn't even let me buy more last year. Anyway, NQ got above our level right there. It's funny that the market was shut down. The regular equities market shut down yesterday. Silver was breaking out to new all-time highs. And the market that runs futures that was open yesterday had a little problem and they had to shut it down. Conspiracy theories abound. So they didn't want this baby running away while the U.S. markets were shut down and couldn't deal with it. Interesting theory. Fact or crap? I don't know. But silver is breaking out. I said for a long time that would probably be the biggest trade of the year. Still has opportunity to run higher. That 60 target is still in the cards for this year. NKD, global liquidity indicator, potentially made the bottom here. Nothing crazy happened. Nothing too crazy happened here while the U.S. markets were closed. If we can get through the 618 level up here, we can see this thing take another leg higher. So we're watching for that break above that 51,000 area. If that can happen, supports a move on up higher. 53, 54, 55, 56, maybe even up to 60,000. If we see that kind of run, we could see a lot of things exploding higher. Looking back at the S&P 500 futures, let's check in where we are. Yeah, we made it above the level back here on Tuesday, back on Tuesday. We made it above the level. We back tested it on Wednesday. Closed the day Wednesday up here. Just kind of sat. Closing the day. Today, coming in right up here. Now, we may, as I drew on here, we may need one of these little pullbacks in here. All right, it could be a little deeper because we didn't do it from down. We didn't do a very big one down here. So if we spike this on up, we could see, maybe these little pullbacks were much smaller than I anticipated, and we see something rally on up here, and then get a bigger pullback. I don't know. Don't ever know the exact path. These were ideal pullbacks, but obviously we didn't feel the need to do that right now. So just kind of sitting. Do we spike it on up here? This is the next upside resistance. This high from right back over here. If we can get through it, sets the stage to go on up higher. If we don't get through it, probably going to take a trip back down in here, test the 618 level. So there you go. Ultimately, this high we made back toward Halloween, right around the 30th there of October. Ultimately, that high is the most important high. We can break out through it. We're probably going up somewhere around 7,000 at least, if not 71 or 7,200. And then we'll see if we can top out in this market. we're due for a bigger correction. We don't just go higher forever. Yeah, this head and shoulders kind of played out a little bit. People, I've seen a few people saying, oh my gosh. I started seeing more posts about this being a bigger head and shoulders at this point. Let's clean it up a little bit. Let's just remove that one off. Let's draw it back on here. Shoulder, head, shoulder. So if this actually plays out, which I've seen a bunch of people posting, which usually you don't get a bunch of price action outside of head and shoulders. It's just not usually the way it rolls. But if this actually plays out, we could see a bigger downside here. This is why these highs are so important. Right there. If we get higher than the head, the current head, well, probably not going on down. But I've seen several people posting this potential head and shoulders in the market. I just don't think when a lot of people see it, it's just probably not likely to happen. And the neckline doing this is not usually when we get the big flush. Typically, it's when we do this and break down that we get that bigger flush. Because this is usually a 3, 4, 5, A, B, C. Right there. Usually that's what happens. And that's usually a 618, which we're already through that right now. So it's just not the proportions that support a bigger kind of correction. Could it? Sure. It's always possible. The market can do whatever it wants to. But the price action right now kind of supporting we're probably going up, not coming down. And the global liquidity kind of pointing to an expansion, not a contraction. Russell, nice bounce going here. We're through the 618 level. We're into this like series of highs that we made on the way down. We can push on through that. It's probably coming on up to 2600 on the Russell futures at WM. Sets us up for potentially 256 and 259. That zone. I did buy a 250, 260 call debit spread. Earlier in the week, it was up over 100%. And I know several people booked that out. Maybe like, where is it? It's in the bonus channel in Discord. Bonus trades channel. If you're a subscriber, it's right out there. Now, let's see. That is not the right morning list. Click save right here. Reload this chart. Grab the current list for today. Make sure you get on that Black Friday sale. Oil, just kind of sitting doing nothing here. Not really breaking out, not really breaking down. Actually, kind of consolidating at the low here. This looks like she wants to break on down. Yeah, it has this potential to build this head and shoulders thing. Keeps pushing this over, and now the head and shoulders proportions not very good, so probably not going to do that. Probably going to push lower. I've been talking about the lower low potential for, gosh, 2 years, almost getting close to 3 years now. We're probably going to go down here before this correction is done. Once we finally get the final flush out, oil may start a bigger uptrend for a while. Gold, taking that nice push higher as soon as we get through this A wave high right there. As soon as we get through that, it completes the potential for this to be an ABC complete. And that'd be the A, this be the B, and we still open up the C wave down here. So be careful. Now on this one, there's no good head and shoulders type reversal thing cooking. So it's not a very classic case here. And this, if we break back above here, this could just be, that could have been all the correction right there. And then this be a 1, 2, and we push this on up to a 3. Then we get a 4 and push it on up to 5,000. So that's entirely a possible pathway. Right now, the deeper correction is what I would expect on gold. Running a little bit different from silver right now. This played out. This spent 7 days, 3 standard deviations away from here, the roadmap line. When we spent just 3 days over here, we spent 5 months consolidating. Spent 7 days out over here. Probably going to spend longer consolidating before we break out again. It just took a lot of energy out of the markets. We could see this just screw around, or we could see a deeper correction really fast and then set it up to go higher. So those are the kind of the 2 things I'm watching for, and that's why I expect more correction before we go higher. This was just way over the ski tips, but it can still keep doing that. Now Bitcoin holding on to this bottom pretty well so far. So far, we're going for it, but we're at a point. We turn down right where we are. Dangerous. We need to get on up here. Need that continuation right on up here. Then pull back, hold the higher low, and set it up. Ethereum hit the ideal downside target area. We want to see this get way above here. We turn down in this orange zone, as I talked about earlier this week. This is the danger zone. If we turn down here, this potentially confirms crypto winter. If we can get above that zone, make it on up to 3360 area or higher, could be setting up for a new all-time high on Ethereum. This is a very key area right here. Key area. This could be the tell for Bitcoin too. If this breaks down, it's probably going to take Bitcoin with it. Global liquidity is potentially increasing. That supports crypto going higher, though. Dun, dun, dun. We'll see. I don't think it's going 1 million right now before we take a bigger trip down. Just don't get too hopeful. Dollar. Jumping back over. So we're still holding on to this kind of uptrend of lows, capped in here. Kind of looks like what they call a bull flag, sort of, but we got these pullbacks that all overlap. So that's not very bullish price action when all the pullbacks overlap the previous highs. It's more in line with a corrective type price action, which if we get down below 98.5, probably coming back down, making a lower low than we made back here in September. So that's one to keep an eye on. It doesn't. Now this kind of does have that head and shoulders a little bit. I was talking about that pattern. It's like you look at it right there. We don't have a very big head. So if this breaks down right here, you can easily see it rip right down there, get below that 98.5, and then get continuation lower Could bounce temporarily. Push on down. Yeah, something like that. Now this can't be the 2. I mean, this can't, you know, this was the higher high here, so that can't, you know, we'll have to have, that was higher than this right here, technically. So I don't know that the head and shoulders can play out there. Apple. Still gunning for this. And we got through the 276, so look for that to push on higher. Next upside targets, 284, 292. Amazon, caution. We reject off of this area between where we are and 240. We can easily end up way on down here. Right now, we held on to this downtrend of highs, which turned into support. But if we take a trip back down through that, it's probably going to get really ugly on Amazon. Google, there's no clear path right now. Google still gunning for that 337 upside. Meta potentially working on the bounce. I kind of want to see a little retrace here, hold a higher low, and then I'd go in probably go in. So we did that A, B, C. You see the C happened much faster than what I had drawn up there. That's potentially complete. Now we're looking for this to bounce and go higher. Absolutely beautiful correction. The upside potentially up here, and it could take a couple years. Microsoft. If we can hold on to this low we made right here, that ABC potentially done, that I talked about for, gosh, what, 3 months? Finally hit the ideal spot right there. Can break back up, probably above 510. Be looking for those targets up there, 565, maybe 600. If we turn down, though, could take a bigger trip down like Meta did, somewhere around the 410, 420 area. NVIDIA, was this good enough, or are we going to have to go retest the breakout from a year ago? These highs from a year ago, we broke out through it back in June, played it out to the upside, and we may need to come back and retest that breakout before we can build support and go higher again. I've been talking about that for a few weeks, that if we didn't hold the roadmap line, that this would be the downside potential support zone. And if we don't hold that, well, things can get pretty nasty, like Microsoft and Meta. But right now, that's the support. And this is the support we've tested. But we're not showing a bullish reaction off of that. So it might be indicative we're going on down here in the next weeks to months. Next couple weeks or months. Tesla, coming up on the key level here. If we can break above that 435 area, sets the stage to go new all-time high, 550. That was an absolutely, not beautiful, but absolutely bonkers correction, I guess you might say. And that B wave went higher than the origin point, but it is potentially complete. As long as we stay below that area right there around 435, we still have potential to make one more dip down here around 380, 370, 380 before we come back up through. So just be cautious here. Now, the tail, even smaller time frame tail here, that this is potentially done, is the fact that we have overlapped this dip right there. This is coming up above it. That dip right there where we came down, we bounced up and came down. We're above that, so that's starting to look good. The next one up right here, just above that 435 level. Get above that one. It's pretty much confirmed we're probably going higher, not lower. So this level right there, right above that 435, that's where we get another layer of confirmation. So above the 618, above that initial dip off that high, then we go on higher. Yep. Netflix still working on this correction. I mentioned how stock splits were probably going to be bearish. The current psychology of traders only looks at the share price, not at the market cap. So when you take something that was 1,100 bucks, shave it down by 10, and you get it to 110, that's looked at as dropping 90% on share price, even though it was a net neutral price action. So be careful. This is probably still going to get punished. May come down to around 100. So looking at things that were moving today, I go pull gainers. Oh my gosh, look at these. See these reverse splits. People love these right here. That's where you take the share price. You know, if it was $1, now it's $8. People love that stuff, right? The opposite of Netflix, and creates these crazy upside moves, but they run out. So be careful. You see, this is an absolute dumpster fire right here. This thing was never like $1 million a share. All these reverse splits. Saying this company cannot get its collective crap together. It's going in the dumpster. Be careful. Absolute dumpster fire. Don't touch it. Dave. Hello, Dave. We can break back through the 618 right there at 239. Upside 301. SanDisk probably still coming back to the roadmap line. Coinbase, potential bottom in place. Next upside, potential 46, 528. Bulls is leveraged. MU. So is that the bottom? I don't know. It's not really a retest of anything per se. We didn't make it to the bullish upside, so we may have 415 in the cards, 410, 415. But it also could come back to the roadmap line very easily, revisit support, and then support that move. So I caught the move from back here on the breakout up to the 200 level that I was talking about for, gosh, felt like 2 years. Kind of was. It was over a year, at least, and we hit it, and I quit it. I got off. So I'm not really interested in getting involved in that right now until we do a bigger correction. Race has broken down. You know, we had this little baby two, a couple lows there. We broke down below it. We may come back up, back test it. And if we turn back down again, it's going to go down more violently. You can look at it this way. Kind of sets up this sort of thing. And that can be pretty detrimental there if we do a little bounce and then break on down. Strategy potentially made a bottom. If we don't hold here though, easily come on down 150. If we don't hold 150, 100 down below that. Now the potential for this to be an ABC, absolutely beautiful correction. It hit the perfect proportions for that. It turned everybody super bearish on this. And if we can get back up through the 618 level, through the roadmap line, through the 618 level, upside target 631, 720, maybe even still 1,000. Still in the cards. The big upside target still in the cards. Nothing really changed. Just how far down we went first. LEU, back to the roadmap line. Look for this to bounce, get up to the 352 area. That's some 514 upside targets. Seeing WDC, potential to come back to the roadmap line. AGQ, and that one's, I spend my way to play silver. Rock and roll, baby. 105, maybe 172. Let's see, A-Lab, back to the roadmap line. If we get back up through the 201 area, 287 on the upside. AMD, probably going to come down. Like, this is the thing. It would look best if we can finish that up. And then is that 5 down. And then we get a 3-wave retrace to a lower high. And then we do something a little deeper. That would be an A, B, C potential. Might need to do that. That could be wave 1 up. We need to do a wave 2 retrace back down to a 618. Turn this off. Move this over that high. We may need to go revisit this 50 to 618 retrace zone before we can go on up to the bigger targets. That's potentially played right now. Very small wave 2. Very small. It looks like potential 5 up is complete. You know, usually wave 1's either stall out right here or just above the original breakout point. Then we retrace and then set up for the bigger move. If this does that bigger retrace, nothing's guaranteed. They can always do whatever they want to do. It doesn't have to go on a bigger, deeper retrace, but it does set up the potential much nicer if we do. That 930 area, potentially where we're going. So maybe even higher than my big prediction around 4 to 600. NBIS, back to the roadmap line. Here's the high, here's the low, there's the resistance level at 111, 153 upside. Sezzle, potential to bounce here. There you go. So that's a move up. That's a 618 retrace. If we can hold on to that, we could potentially come on up here. In the short term. Oh yeah, lines all up. Beautiful. Beautiful potential. Could come right up in there. Decliners, Oracle. It's back to retesting the breakouts. Might come on down. Not sure there. AU. All-time high. Let's see. It's bits. Like I warned about this one, probably going to get a vicious retrace right here. Be careful and come down pretty violently. Baba still needing to hit the roadmap line. We're getting close, but close is no cigar yet. We need to actually hit it. Setups for today. Things that were actually set up with a bounce today. Look at these. I guess they set up Wednesday. Yesterday was closed, so it didn't give you an opportunity to get in. So here's the opportunity today. Turn these on. So 35, that's a statistically significant population of trades. This one underperforms the 75% average as a negative profit factor. So maybe you don't want to get involved, but 36.64 is the target on that one. AMRK, here's the high, here's the low. Entry, 31 targets. ATKR. Kind of a downtrend coming into this. What the heck? I don't even know what I hit. Oh, I hit the... Here's the high, here's the low. Entry, 75.98, but that's a downtrend, so not my favorite. The statistics I've done on these say that this doesn't mean anything. Like, you shouldn't, like, they don't fail any more often because of this, because as long as we have the low and we're working on a reversal, this could just be part of a reversal that goes on to be higher. This one doesn't have any kind of statistical significance here, so 75% of the time, once we activate the trade, we go on to the 1448, which is 75.98 target. CCB. Didn't activate the algorithm in TradingView. Activated my Python algorithm. There's the entry, 122. COF. Capital One Financial. So the bigger pullback over here did stop out right there. Coming back up for a new entry. This is technically the high, the low. Entry, 233 target. That was just kind of an average mover. Not an outperformer. Here's the high, here's the low. Entry, 124 targets. That one's not bad right there. That's an average performer. 31 trades. Confirms it's just an average trade, but it does outperform on the profit factor. The average across tens of thousands of trades is 1.2, and this is sitting at 1.9. So 124 target up there. Carvana. So we've got this big pullback in here. Activating above. Looking for 435 target. Doesn't have much history, but 100% of the time it's on 6 trades. If you can flip a coin 6 times and get heads, it's kind of what that's had so far. So don't read into it till we get above 30. Here's the high, here's the low. 63 on that one. And again, statistics don't matter on that one. This one we've already basically talked about. 114 target. Not bad. Average. Hope. Let's trade on hope. This one entered back here on the algorithm. Got a nice deep retrace. Did not stop it out. Stop is always $1 below the low. Secondary bounce here. Coming up with a target at 11. And low price stuff under 20 doesn't always work, so be careful. ICLR. Got a high right there. A low right here. Coming up for an entry and 221 target. IFRA. High right there, low right there. Entry 54.65. IQDG. It would have picked up that bounce right there and 41. So you can play off this too, and 41 is still the target. IWO. Here's the high, here's the low, there's the entry, and 342 target. IYT. This got in from back here, still hadn't hit the target. New target, 74. KBH. Here's the high, here's the low, there's the entry, 70, 60 target. MSGS. Here's the high, here's the low. Entry, 240 target. NDAQ. Here's the high, here's the low, and I would wait for the higher move there. The Python algorithm picked up this smaller move, 94 target, but I would wait for the bigger potential. OMFL. Here's the high, here's the low, there's the entry, and 61 target. ONTO. Got the high, we got the low. Entry 154. OSIS. Here's the high, here's the low. Entry 301 target. PTLC didn't actually hit the 4-hour bounce. 57 target. Rolled gold. Royal gold. High, low, entry 215 targets. SPGP. Here's the high, here's the low. Entry 117. SPYD. Here's the high. Here's the low. Entry 45. ST. Golly, there's a bunch of these still. 39 today. So that one didn't make it to the target on the prior entry. New entry 34 target. SVIX. I was already long short VIX on SVXY. Entry 22 target. This has been really choppy. I'm not sure I like it right now. Statistics are down the bottom even if I don't comment on them. SYNA, target 75, TECK. Here's the high, here's the low, there's the entry, 45. TNA. Here's the high, here's the low, entry 53. TOL. Here's the high, here's the low, there's the entry, target 154. TPR. And here's the high, here's the low, there's the entry, 122. Union Pacific. Here's the high, here's the low, there's the entry, 241. Target. URTY. That's a really pretty move up, really pretty retrace. 6250. This would be one that, when I comment about them being really pretty, this is one that would have caught my attention when I was looking for them manually. I went like, oh man, look at that. Beautiful. 6250 target. 2166, 1.1. Just a normal average performer. BBK, another, that pattern looks almost the exact same right there. 315 target. VIGI, kind of choppy here. Did hit the target last time. Got a nice retrace. High, low, entry, 9251. VO. And before I had algorithms that go hunt these for me. Entry, target, 300. VXF. Here's the high, here's the low. Entry, 218. And last but not least, XLY. Got the high, the low. Actually, let's see. That high, maybe slightly higher. 246 upside target right there on that one. This one, look at the numbers on this baby. That's not statistically significant, but even with 6 losses, it's not going to wreck that. And that profit factor, this is probably one that you should maybe consider taking. Remember, these can last 7 months, 150 candles, the 99 percentile. That means 1% of the time you can still run out of time even if you have 7 months. So shares is the best way to play so you don't run out of time. But there you go. Bias for the day. Don't expect much at all. Probably just kind of churn around. Be careful out there. Close at 1 p.m. Eastern. Have a great day.